Welcome to Trading Lounge and the indices. I just want to start with the US yields here and the bonds as well. So obviously the Feds are keeping things steady with the view of having rate cuts next year. So that's in line with what we're expecting with the government yields here. So this is a weekly chart, so we've got that 1, 2, 3, 4, 5 here. So in a bit of a nutshell, we're looking from the top here, we're looking at some sort of ABC correction into this space, and that's on the weekly chart. So on the we'll be looking for 5 waves coming down here in this particular move. And if we move to the daily chart here for a moment, so we've still got this nice trend down. We're going to get a bit of support coming in at the $4 mark here for this. So I won't go into the intraday here, but just to let you know that, the Fed's comments and the Fed's direction are really keeping this trend here in line, and their view is to get it down to 2%. The 50-60% retracement level is actually down around sort of the 2.5. And the 30-year yields around 265. So we'll see how they sort of play out. And obviously the bonds are doing the mirror opposite here as well. So we're still really looking for this first. This is a little basically 1, 2, 3, 4, and 5 in here for this. It will be something like this here for the yields. I won't go into that at the moment. We can see that the trend has been, it's coming closer to a third wave top here, so we can see diminishing volume into that. So the volume is confirming the price action on that as well. So just a little update on the trading levels template for TradingView. It looks like I may have got it passed now, so I will be sending invites out for that if you've emailed me at peter@TradingLounge. Okay, so just wanted to go into that sort of space, so we're in the right space there. So with the S&P here, we're pretty much on track. We've been counting 5 waves up here, and we'll be coming into around the 4,700 area, and so we'll see this as wave 1, and over Christmas period there we'll see this lower volume, of course, in wave 2 to pull back. Markets really like in terms of the trading levels, in terms of the bigger picture here, 1, 2, 3, and 5. Once you get past the 50% mark here, and you've got support on the 50% mark, which is the medium level here, you normally get sucked up to here anyway. So it's all looking good. So we can expect a reasonably small correction in here for wave 2, but then 3, 4, 5 up here for a larger wave 1 up here. And we'll talk about this 1 and 2 a little bit more on the NASDAQ, because because a lot of folks will be thinking that having 3, 4, 5 up here would be the end of that trend, but it will just be wave 1 and then back for wave 2 and wave 3, and I'll explain that in a moment. But in the meantime, I just really want to go into here on this market, so I'm going to go from that into 20k here, and this particular, so we've got wave 3 here and wave 4 here, and we've got 1 and 2, and we're going up into wave 3, 4, and 5 here. So obviously the 4,700 is a big number with a couple of zeros on it, so it's highly likely we're going to see, I'm not sure if it's got a little bit more gas in it, but it will be seeing something like this. Because the extension's in wave 3, that means wave 1 and wave 5 can be roughly the same. So we're sort of looking at that there. It's always sort of buy the rumor, sell the fact type of thing with news anyway. So that should be sort of running out of steam, and this particular count will be in line with many stocks, mainly Apple in that instance. So yeah, that's where we are at the moment for the S&P. For the NASDAQ, just on the weekly chart here, just have a bigger view. We're coming into the old high here, and so you could imagine that, coming into an old high, there's always a dance around here. There will be, some selling, so there'll be a retracement, and then there'll be value buyers coming in and pushing it up higher and all those sorts of things, and but eventually pushing down. But it takes a while for this to become the support of that you know, that previous top over there. And yeah, I want to just point out the reason I've got this as wave 1 up here, because a lot of Elliott people will probably have this as wave 5 as it goes up further here. So we'll end up having 1, 2, 3, 4 and 5, something of this nature here, and pulling back and then pushing up here in the bigger picture. And yeah, I mean, there is a case to put wave 5 at the top there, and that's it, and we can have a bigger correction at that point. But the reason that's not the case, in my humble opinion, is because when you look at some of the stocks, so the NASDAQ's taking the top out here, when you look at some of the stocks, and a big stock like Amazon, it hasn't taken its previous high out over here just yet, do you know? And even if it came close up here, then it's still really not good enough to, you know, send it way up here in that regard, you know. So with Amazon here, we can expect, you know, this sort of structure to come into play, and, you know, then this, and it'll be sold off at the old highs over here, that type of thing. So it's not big enough to go through. The extension again is in wave 3, so wave 1 and wave 5 here can be roughly the same, give or take, but it's not going to go past that high very far anyway, you know. So it's kind of leaving it as a very weak 5th wave coming into play. Do you know what I mean? So, and there's other stocks that won't take the top out here either, and they have 5 waves up. So we can look at the Googles and the Microsofts, the leading stocks in the AI space for that. So yeah, so just taking on this here, and let's just go in and pick it up from this wave 4 here. Let's just have a look at the daily. I'm not sure what charts I've updated, but it doesn't matter. Yeah, okay, so this gives you a bit of a clearer picture of sort of where we're at with this. So yeah, so look, just looking at 4 and 1 and 2, 3, 4, 5. So that's all good. So we've got to get 5 waves out of this here, and this is what we've been doing with all the tech stocks as well. So based on that, we can obviously, when the Feds have their meetings, it can skew things around a little bit, but I think it's all pretty steady. There's nothing sort of new here. You know, the run that we've had with all of this is, you know, it's pretty sort of clear, you know, what was happening, you know, what was going to happen with the Fed situation. So anyway, from this wave 3 to wave 4 here, we've got a beautiful little wave 5 structure here for 1 and 2, and then 1 and 2 and 1 and 2. And then we'll look at this as 1, 2, 3, 4, 5 for the 3rd and 4th, and then 1, 2, 3, 4, 5 here for this 3rd wave here that's not finished, and that could go a bit further. And this wave 4 can pull back to the wave 4 one lesser degree, may or may not. This is a bit of an unusual number, the 16,500 here. If you know the trading levels, you know 65 is important. So this is the lower end of minor group 2 in the bigger picture. You could at this degree of structure, you could also look at it as a medium level as well, but I won't go into that at the moment. It will carry some weight, and you will see that as this unfolds. But as with all trends, there's a beginning, the building process, there's the middle, and then there's the end. So what you see is not what you get next in the market. So just be a little bit mindful of that. But this is pretty much what we're looking at once this tops and rolls over here this week and next week. And this is what we'll be seeing through Christmas. So we're not going to be missing much. And this is where we really want to, I mean, it may not pull back this far, but, you know, we'll see. We'll just count it. It should be a 5-3-5 structure here, so we'll just track that. Should be pretty simple. But this is where we'll be building in for the next longer term trend coming up here. So yeah, so we should be able to have an enjoyable sort of Christmas without having to concern ourselves without a bull mark. Santa's obviously come and left his goodies, and we can all chill now on that. So that's that. And the other markets are pretty much falling into play the same as well. So we've got the the Russell here as the ETF as 1 and 2 and 3 and 4 here, and then 1 and 2 and 1, 2, 3, 4, 5 for the 3rd, 4th, 1, 2, 3, 4, 5. So yeah, I mean, that could even go up there a bit further actually. So anyway, somewhere up there, something like that. It looks like this is 1 and 2 and 1 and 2. So we need 1, 2, 3, 4, 5 for the 3rd, 4th. So there's a little bit, you know, a bit more to go on all of this. But yeah, so what's today? Thursday, Friday, Thursday in where I'm at the moment in Australia. So that's that sort of pattern really. I mean, we could extend it up further, I've mentioned before, but if I extend it up further, which looks like the right thing to do, if I did that, then it would be out of line in terms of timing with all other markets. So let's go and have a look at the European market. So the DAX here, much the same as well. We're tracking 1, 2, 3, 4, 5 up here. And then we'll have that pullback there. Obviously, the 17,000 is the closest, largest number. So that's going to be a bit of a glass ceiling at that point. But let's go in and pick it up maybe from this wave 4 or something. And it's a little bit tricky to see. But if we look at this as wave 3 and 4 here, then green 1 and 2, and then 1 and 2 and 3, 4, and then 1, 2, 3, 4, 5 for the green 3. So we've got green 2, green 3, green 4, and then we're going up here for this to play out. So it still needs to move up higher here. So we'll be dancing above the 17 here. The 17,100 will also be a nice resistance level here, which is the beginning of minor group 1. So that will play out in there somewhere like that. I think we talked about going long here above those highs, so maybe you've got that this high here, I think it was. But anyway, if you got that, the 17,000 is that next target. So we move over to the Australian market and the English market. Now they have got different patterns occurring, and quite obvious that they've got different patterns. So we've got this particular larger pattern here on the daily chart here. You know, what I was sort of thinking about all of this really is that when this market, say, that this is the DAX here, when it goes from 1 back to 2 here, or we look at the, you know, the ETF for the Russell, when that pulls back for wave 2 here, or the NASDAQ pulls back for its wave 2 here, all of that sort of thing, it would bring this back here and finish off this triangle pattern here of this ABC for the A wave, and ABC for the B wave, and ABC for the C wave, basically a WXY for the D wave here, and then down again for this, and then up. So yeah, I mean, if this wanted to go straight up from here, it's a little, I mean, based on this 3-wave correction here, which is corrective, that means that eventually we'll be taking out this top here. Can that just continue to go up here? It's possible, but we've got this low here, so that means we'll have to look at this as 5 waves here, and it doesn't really give us 5 waves. It's like an A and a B here. Yeah, we'll see. I'm not going to rush into anything here anyway. So 7.6, it could make a new little high here, not the end of the world. It's a pretty complicated pattern in here, and you could certainly count it in different ways. I've got it here as a W and an X, and then an A and a B and a C up here, but obviously we've got overlapping structures in this 5th wave here, and it looks like we might want to make a new high here as well. So that was a bit of a blunder, but I'm still going to stay on track to where I am, even if we get, which we will here, it looks like we may not, but if we did get another high here, I'm not going to worry about it because it's not going to go far. It's going to be something like that, and then we'll just rearrange this particular pattern here into some WXYs and bring this over to here, and when those other markets pull back, then we'll pull back with it. So day traders can, you know, move in on this if they wish, but I don't think it's going too far on this note. So I'm just going to leave that where it is at the moment, and then we come to the Australian market, which is we've got 2 counts of this, which is also a bit of a triangle pattern through all of this mess here as well. It's not that clear. We can do things like put this wave 1 up here and wave 2 over here. It's just such a big wave 2 compared to this wave 1 here. You know, that's a bit of an issue for me, but we'll have a look at the bullish count. My target was this 7,300, and we've just push through that. So when you push through a large number, it normally goes through and then comes back. You know, even like this one here pushes up here and then comes back. So we'll check out, we'll have a look at the intraday and see how far that needs to move. So this would be when this pulls back, when this, let's just say we'll bring this up here, when this tops here and we get this ABC pattern here, that will reflect back from the NASDAQ as well as this ABC pattern here. And then we'll look to go long again up here. So we'll need to just readjust this in here, which I'll do on the hop here. So we could expect this to move up a bit higher. I don't think it's got a lot to go in all of this really, you know, and then have some sort of ABC pattern here. How far that comes back is yet to be determined, but it should be quite simple as an ABC pattern. So we'll see how that plays out, and then this C wave over here for this. I don't think this is the case. It does look quite good. If we have a look at the bullish case for this now on the 20k tick here. So the bullish case, as I just mentioned, is having wave 1 over here and then wave 2 over here. It's just doesn't really have the right look and feel. It's doable, but it's just, yeah, it's just not the right sort of look and feel for it. But you know, it was doable, so we've had it here, and it's looking quite good at this point. And you know, I have to say that our banks have got further to go. If I can just come over to here for a moment, this is Westpac here, because our, you know, the ASX200 is pretty much dominated by the banks. More volume goes through on those banks and the other side. So here we could see that we're looking at 1 and 2, 1 and 2, and a third wave here. So we've still got a fair way to go up here for all of this. And then that would bring us in. Let's just have a look at CommBank as well here. So with CommBank, we've got, I don't need that there for the time being. So yeah, we still got further to go up here for this as well. So I do think that this is bullish here. So this is lining it up with the still got further to go here. So in this case, so it's slightly different, but it'll be like this. So there is a good case when we come back to here to look at it like this, you know, as a bullish case. But I'm just not going to get too excited just because it's pushed up here. I'm just going to just sort of chill on this a little bit. We will have to rearrange the intraday count on here because it's kind of lining it up with the other markets around the world. So we're looking at it as this here. Let's just bring this back in here a little bit. 1 and 2. We still got further to go. 1, 2, 3, 4, 5. I've still got this to play out. So we still got this to go here. I'm not going to send us long here for the longer term without the S&P and the NASDAQ and so on. Okay, so this could push up a little bit higher here, I'd imagine, but we'll see this play out here and do something like this. It'll be something like this. And I think we also need to bring this up here too. This is another issue here. So this will be something, I'm going to change this here. So this will be 1 and 2. I can't put that as 4, so it's got to be 1 and 2, 1 and 2 here. So it's got it can go up a fair bit higher here, but I'm not going to send anybody long here without a proper setup on this particular number here. So I think this will fade. So tomorrow we'll pick it up. Here again tomorrow. I suppose that's definitely 1, 2, 3, 4, 5, or 1 and 2 is 1, 2, 3, 4, 5, and that's overlapping. There's got to be 1 and 2 and 1 and 2 here. So it's like we're in a third wave here that still needs to go up higher. Yeah, I'm just going to wait for a setup here for this. I'm not going to send us long. Thursday has got a habit of opening higher, right? And then trading down for the day. That's what Thursday can do. So just be mindful of that. We do need a setup on this number before we can go long. There's no way I'm going to just go long here for this. So I'll just wait on that. But yeah, I mean, the banks appear to be having, much stronger move to the upside. So we could go bullish. Let me just double check on a couple of other things. BHP's okay. FMG is okay. We still got 1, 2, 3, 4, 5. We'll end up pulling back over here for this. So these are kind of bullish markets. I'll just have a look at Rio. We've been looking at Rio as well. I know these are commodity things, but just want to have a look at that. See, we've got this as 1 and 2 here, 1 and 2. So we're in this bull market here. We've done all the right things at the right time with all of this, and we'll look to add to this again here as well in due course. But we need that first high. That's 1, 2, 3. So we'll still need a first high above the level and a few other little things to go on here. But we'll get that sorted out a bit later. Once that 30 becomes the support here, we can lift this stop. We'll lift the stop up, but when that gets triggered, we'll lift this stop up to under here. But we're not going to do that just yet because that's the top of group 1 at that point. Okay, so yeah, the Aussie market can still push up. We've got banks and we've got resources on the same page. So I think that the Australian market could be a bit more bullish than the other markets. But I still want to see a setup in here. Okay, cheers.